Welcome back. This is day 43. Ladies and, ladies and gentlemen, appreciate all of you guys for tuning in. We are on the clock today. We've got probably one episode in us. Potentially may do another one in the evening, just depending how everything goes. So, if you haven't heard, That's the Edge is our new journal system where you're able to log your trades, and if it wants to load, you can see here that you can do a lot of things. And just a quick overview, you can log your trades, of course. Normally, you can enter the details of the trade you've taken. We're currently updating this to where you can add your TP, where you can add the lot size, etc. You can also search your pairs over here. You can also have a followed my rules checklist, which shows your discipline, of which you can then edit it soon. You can create a tag if you maybe notice there was a lot of manipulation in the market. You can add that as a tag and it will showcase here. And you can drop the image of the chart that you want to use, create some notes, and of course the pair, whatever it may be. And then you can set the entry prices as well. As a pro user, you'll have the ability to scan a trade automatically, updating this so that it can also take a take profit, and then it will apply it for you, and then it'll tell you the distance, risk ratio, risk balance, etc. when it's available to you. You can then save the trade, and you can revisit your trades that you've taken. You can also filter it by this month's type of trades, active trades. These are just the quick filters, but you can edit the filters down here. You can even search it by a tag. You then have a calendar which shows you how much you made during the week and months. You can edit this over here, yearly, quarterly, whatever will suit your fancy. You can also filter it for longs as well. You can add some filters here. You can also select the account, and it shows the analytics for the account. And if you click on analytics, you then have more tools available to you, such as these charts. You then have an activity heat map, which showcases profit and activity of trades. For pro users, you can review your journal. You can get updates on terms of your log trades, maybe gives you information, etc. You then have a cloud storage, which is available to you if you want to store your trades locally or even on your own Google Sheets document, and then a contact form where you can have a voting idea from the community, where anyone that puts an idea forward and upvotes it, the highest one is probably the one I'll focus on. Then you can also contact me for anything else that fits into these criteria. There's also some other things you can do, but this is not a promotion video, so I'm not going to spend too much time on here. We will start using it a lot more when we are aiming, as we're aiming for, I think, May 1st, May 8th to return to trading, like actively trading. We just want to complete the ICT mentorship. On my Telegram, I gave an update for such, and not to bore you with all of this, but if you look here, you see the mentorship is 41 episodes, average hour long, one a day, at most two. Obviously, it's an average. And then obviously with us being on episode 5 yesterday, we have 36 left, which is I'm predicting me to finish on the last day of this month, which is April the 30th. Excuse me. And then from then, for about a week window to kind of summarize the information I've learned, turn it into a rules set list, and also have the capital to invest. From May 8th is the date of such. And then I will be posting on social media a lot more regularly soon. And you can see here, they will be on this Instagram account and this TikTok account, I believe. I might change the TikTok, but I most likely won't. I don't know why my Telegram looks like this, but anyway. And then, of course, my Instagram is over here. So those are 2 social media platforms I'll mainly be using. And then I will be updating the journal as much as possible. I'm aiming to do once a week. Once I've kind of got the biggest update yet running. It's going to be a little bit difficult just because I'm the only developer. I'm also working on another business, and I'm also doing a lot of things outside of work. So with that, it's going to be a little bit difficult, but it's going to be, of course, our goal to make it a weekly update so that you're constantly getting improvements. And of course, there's a section there for you guys to help me know what to change or update. There will be one new business a month I'll be trying to complete. We're working on another one behind the scenes. It's a lot of effort. I was researching how much it would cost. It's about 100K, and I'm doing it for free. So with the month deadlines can be extremely difficult, but I don't care. I'm going for it, and I've seen the idea, I've seen the vision. I want it to come to fruition, so that's my aim, to turn that into reality. And of course, daily live streams for the next 1,000 days. but I'm saying weekdays because I may not stream on the weekends as the markets are closed. And I'm going to do this for 3 years. And those are my main focuses right now, to eventually start my Instagram platform, weekly updates, a new business a month, and then daily live streams. The daily posts, I want to get some B-rolls, which I'll be recording over some time. I then also want the weekly updates is probably what I'm working on that daily anyway. The new business as well is daily. These two are daily. And of course, well, these three are daily. These will be daily soon. The only reason why they're not daily right now is because I want, like I said, B-rolls. I want ideas and good quality consistency, if that makes sense. So that's my idea for that. Okay, and this is obviously the link to the website at cedge.com. So this is my Instagram. This is my TikTok. No posts yet, but we will come through soon. This is the website. This is my YouTube. Obviously, you guys are here already anyway. And you can see here we've been streaming consistently for days and days and days and days and days. So we're going to keep that up to the best of our ability. And yeah, no matter what, even if it's sometimes it's streams where I come in for like 10 minutes, like here's 10 minutes, 16 minutes, 12 minutes, 10 minutes, 1 minute, just so I can say that I turned up today, you know. So this week was quite difficult. I think this was kind of Easter weekend. So I was very busy outside of, you know, sitting down and working. That's why it's shorter. But then I come back 46 minutes, nearly 2 hours, you know. And today I'm planning to do at least an hour. So let's keep up the good work, and let's get straight into it. So now that's out of the way, we can return to the mentorship. What I like to do is to summarize what I learned in the last episode in the beginning of this, and then to transition into listening to the new episode. So let's start off and find episode 6 if we can. That is all the way down. Oh, it was episode 5, so we watched. Right. So it was more information, and I remember now I did say that I was going to go back and do some screenshots and annotate. So we're going to do it now. Let me just quickly look. So episode 6 is 48 minutes. Episode 7 is an hour. We'll probably, we're only going to be able to do one. So episode 6, I might do 7, 8 when I come back home. Kind of depends how I'm feeling, because there's a lot of studying I'm going through right now. That's all. Right. So episode 5, we'll get some annotations. But before we annotate, let's just summarize what we read. So from 6 to 7 p.m. GMT, should we say PM? Do not trade. That is the New York noon session, where they take lunchtime break from about 12 to 1. Generally, we don't take trades after the 5 p.m. because it is not a clean time for price action. So that's our reasoning. We don't do it. And the reason why we don't do it is because of this. We actually aim for the 5 p.m., which is an hour before the afternoon session, because ICT said that he does do it, but he can do it rather, but he avoids doing it. Right, so that 6 to 7 p.m. GMT time is, generally speaking, the time frame you want to be trading in. We want to start on the 15-minute, and from the market open, we're looking for obvious swing highs and swing lows. Okay, we get that from the market open, which is 8:30 a.m. GMT. It's 8 a.m. GMT, and then for the New York session is 1:30 p.m. Right, so with that, we then look prior to that, which will include the London session, look for the obvious swing highs and lows, which will be where buy side and sell side liquidity are. We then turn down to the 5-minute time frame, and we are essentially looking for the stops, or rather the stop hunts, to appear, which is the price to move towards sell side liquidity, right? So there was an example of a 3 drive pattern, which is another idea where we don't need it to kind of sweep per se, but we can look for it, which is where we have a 3 drive pattern, which is where price creates a push. Let's say it's a buy side liquidity aiming for push up, retracement, push up, retracement, push up, retracement, smaller movements, smaller sizes, so it can't be like too wicky. And then that needs to approach high, because there'll be liquidity in that leg, because every time somebody enters a sell, they'll set their stop loss above the previous high, that gets taken out, and then it does a 3 drive pattern. So it's happening 3 times. So it's 3 sets of different types of traders entering the trade, losing money, which is a lot of market orders for the institutions to actually execute, which means that they don't necessarily always need the high to be taken at that point. So for us to avoid falling into this trap, well, one, for them, they are not there hasn't been a sweep of liquidity, or there may be external liquidity, and that is from the 5-minute, 15-minute time frame upwards. That's number one. Number two, on the retracements, there hasn't been a displacement, and we're looking for that displacement, which is the footprint of institutions to follow suit. The reason why we wait for this displacement is because we will be trapped. You can be almost seen as a trapped buyer or trapped seller, depending on the circumstance, if you are not following institutions. If you move before institutions, you are at risk of institutions looking at you as food. And depending on what you do, you may end up fueling the actual move. So a lot of the times it's like I've been in positions where I've seen where price is going and I enter a trade, but I get swept out, which is the reason why I even started this whole new arc of relearning a different side of the markets. And that pattern I saw was because I was moving before the money, smart money was moving. Smart money just means banks, hedge funds, etc., which is people with a large amount of money who make a lot of money and also have a large impact on the market. So those are the types of people that I would move before. And because I'm moving before them, I don't know when price is going to make a move, but I know where it was going. And that's the difficulty with that skill set was in the wrong order. You need to know where price is going first, then you need to know when to enter. And I was knowing, or to be fair, I didn't have the wrong order. I just had it wrong. I knew the direction, I just didn't know when. And now that we are creating an understanding, we can then target a when. The understanding is to know how smart money moves, to know when their footprint is, which is the displacement. That's one of the examples. And then because we know when, or rather we have an understanding, we can then target when, which is to follow after. We can put ourselves after the institution, which is displacement. It's basically us waiting for the markets to show its hand. So if you're good at knowing direction, you can then trade afternoons in New York, which would be after that 7 p.m. time, which is generally speaking a time I don't like to trade. Spooling is where price keeps offering a price in one direction despite volume. That's a key term that we learnt the meaning and definition of. So basically it's saying that the main point of spooling is that it stemmed from the philosophy that supply and demand doesn't move the markets. Okay, cool. So that is what we learned from last episode. What we're gonna do is rather than re-listen, we're trying to might not annotate because I'm just we will. Okay, so let's get the 3-leg pattern as an example. I'm gonna screenshot this. And that would be, let's put this over here. It's a 5-minute. Okay, let's then insert a drawing. Simply just be a circle. Transparent, the red border, and the border weight, save and close. We want to circle this. Okay. The red circle, bolding it. Stop Hans 3 drive. I'm not sure what I was going to write here, so we can delete this. So this red circle is the stop hunts and the 3 drive pattern, which I was talking about. Sometimes it's just nice to have a visualization. You can see here we didn't take the previous high, but we created an equal high. But look, we pushed up once, sellers get trapped because the price pushes up, takes them out. Sellers get trapped again. Guess what? They get pushed out. Sellers get trapped again, and then there's a displacement. So that displacement is a confirmation of the 3-leg pattern, right? And that's how we don't get trapped, is that we wait for displacement right here. We don't get trapped because we wait for displacement. That's our confirmation. An example to visualize this is like, imagine a swimming pool that's filled up with water, but it's a children's swimming pool, like the one you put in front of your house or in the garden. And you have an elephant, which is big in size, walking towards the space in front of the yard, and it happens to just walk into the swimming pool. You would see that a lot of that water will splash outwards because there's a big player in the market coming into the market and creating an impact. That displacement is like the elephant. That elephant that displaces the water outside of the swimming pool is the market showing its hand, is the fact that, okay, right, it looks like the water here is gone. And what's the difference? The difference is if there's no elephant and you're filling up a swimming pool and the kids are playing in it at the same time, Well, there's going to be a bit of back and forth, right? As you're playing in a swimming pool, there's going to be some water falling out. So you're going to have some displacement, but the displacement is so minute, it counts as one of these legs. Look at the size of these candles. They're very small. So they don't really have that much impact on the overall direction of price. These small kind of movements, or this movement here, which was technically is a fair value gap, but did it break structure? I don't think it did. It didn't break structure. The lows are here intact. So there's going to be some moments where there's displacement of the water, but you're also still filling up. And so that's the example I can give to show, like, and to be fair, it's not my example, it's the one that he gave, just expanding on it a little bit. So yeah, and anyway, this ended up, look on the left side of the screen, you can see the highs will stay the same, they're now equal highs, but there's still buy side liquidity up here. So after market targets this low, has a sweep of it, then has a shift to the upside, price and consolidates. We don't trade during afternoon time. Price comes up here and then continues the move, taking that buy side liquidity and continuing the overall push to the upside. Okay, so we can move on now. Now on episode 6. Okay, so this is kind of the fundamentals as to the philosophies. I have used it here as well. It stems from the philosophy that still applying them on does not move the markets. That's a very good segue into this next episode, because we're basically saying supply and demand is kind of volume. It's kind of like retail traders, and you can see in the markets that a lot. I actually like this diagram. If I'm going to take it, so I can help explain on my own document what I'm seeing. So there's a few things to observe. The first thing I notice is the size of the circle. The uninformed, let's just use what it says here, speculative uninformed money is larger than smart money. I'm also going to just take this rather than write it out. It's easier that way. So let's go like this. Maybe let's go like this. So we know the speculative uninformed money is larger than smart money. We then know that, well, let's put it down here. We know that smart money does not use indicators. Why? Because the most important factor is time. Time is different smart money than to a retail trader. A retail trader sees time as whenever they trade the markets. And there is okay. Smart money, however, understand. Same. I like that. That trend, I used to say that all the time. The trend is your friend until it's at the end of its trend. That was one of my questions I had a lot earlier in my trading career. Because a lot of the time, the trend is your friend, but what happens? How do you know when the trend is over. And it's difficult because the previous kind of training or ideology is that the trend is over when it stops making lower lows and lower highs if it's in a downtrend, and if it's an uptrend when it stops making higher highs, higher lows. And how does it stop doing that? When it creates a lower low, when there's a market starts to break towards the opposite direction. That's a sign that the market shift is, or the market trend is over. The problem with that is that the markets rarely ever move so cleanly. So to find the situation as such is extremely difficult, even when trading order pairs. And like you said, how do you know? Because the first time it ever breaks the trend, there is little indication, because you expect price to be drawing back anyway. If price is moving an uptrend and it's creating high highs, high lows, well, when it's pulling back, you expect it to go up. And if you buy that at the time of a reversal about to happen, you lose money no matter what. Even if you predict kind of even if you have key areas of interest or support, demand, supply, whatever. Anyway, man, what I realized with that strategy is that you will make money for a while and lose more money than you would make, if that makes sense. So essentially, you're basically making money and then losing money. It's like a cycle. But anyway, the trend is your friend until it's at the end of its trend. For every rule, there is an exception. That's all I wanted to really write down, but I have to pause because I'm listening to the video at a faster pace. So I can't really talk and listen. I can't type and listen because I'll miss something. So here we say how to internalize price delivery. So for pattern's sake, I think he's going through this now. I kind of wanted some text by here that was relevant to this, but I might make it like horizontal instead. Yeah, we'll just leave it like this. He didn't really explain this market efficiency paradigm, but okay, perfect. We're on the topic of fair value gap now. So the key. How do I? I think let me just take the image and I'll do my own explanation rather than copying this. Wait, how did he word it? The problem with this diagram is that it shouldn't be a body; it should be a wick because it opens here. It would have to. It closed here. It would have to open here. But, anyway, you see spores in opposite direction. I really like this example, but I want to make it. Make this example. It shouldn't go like that. Mm. Anyway, and now you want to work, huh? That's it. That's cool. I know you can do that. Now I'll do free confirmation. Boom. Go slow that bit down. a screenshot. I need to listen to it again. Where is it? Because we can do this live right here. So right here. You can see this high over here. Well, I'm assuming he's talking about the past, right? So I would have been looking at. Because we had buy stops over here, right? We had. Where's the time? Okay, 8:30, which will start from about this candle here. So we kind of start around here, and we were looking at everything before. So don't forget, this is New York time. So this is 5 p.m. for us. Oh no, this is 1:30 p.m. for us. Excuse me. So everything before. So I'll be looking at this high over here. You can see we have a buy run over here and have a displacement, pull back into the fair value gap, and then we have a move to the downside. You also have over here a break of this structure here, because technically we had the low, broke this high, came down here, probably broke market structure on a smaller time frame. Don't forget the 15-minute. If you scroll up to where we say 15-minute, we just look for obvious swing highs and lows. We have our boy Adnan Shadzad 5417 says, hi my guy. Sorry I saw your message very late. I've been very locked in on the study session. But yeah, shout out to you. So yeah, on the 15-minute time frame, we see here that the market open, we're looking for obvious swing highs and lows, which is the job of the 15-minute. We'd have nothing else. On the 5-minute is where we zoom in and we look closely at the places we've marked on the 15-minute. So for me, I am personally draw it so you can see what I'm saying. But where's the horizontal line? Anyway, do want to see it though. Don't. What? So this high over here. Zoom in. Let's get this screenshot. Get some red circles. Just copy the one that we have. Let me get a better screenshot. So I can utilize that code properly. Where's the text? All right, back. Sorry about that. It's currently 4:45. We have 10. That's like 20 minutes left. Okay, cool. So is that liquidity? I'm gonna make note of that. I think it's important sometimes to see what to do, but also what not to do. And in this instance, he's talking to us about how this is the first initial move and the reason why we don't take it. Facts. Nice. For 10K in, made 5.2K. Nice, dude. In the what, one day? Quite a few. Nice. I mean, we kind of already knew this, but I'm gonna still add it. Still quite good. I wish I had. I think we'll try put a screenshot. I wanted to try get it to fit in here, but Ladies and gentlemen, is episode 6 done. A lot of information for us. We're coming on episode 7 now. We can probably do 7 and 8. I might, depending on my mental, because I'm gonna almost be studying to an extent this evening. So I'm back around 9:10, which is 17 and 22. How can I do the maths there? 5 hours. So yeah, I know of those 5 hours, maybe 2 hours would be traveling, or like an hour and a bit would be traveling, prayers, listening and learning to the word, and then coming back and whatnot. So yeah, we'll see how we feel. Definitely we'll be trying to do some tomorrow. Because tomorrow I might be traveling. I don't know how or when I will be able to do it, but it will be done. So yeah, this one we learned a lot. We kind of just gone over what we already know, but it's always good to go over what you already know. It just reinforces the idea of things, and we still write it down whether we know it or not. I think that's so key. And yeah, you can see this document is beginning to grow. Prior, when we started this document, we were a bit half-hearted with it, but then we decided, you know what? We're either going to trade live or we're going to finish the mentorships, and we decided to finish the mentorship because that is the right thing to do. And so, yeah, that's why we're here. Episode 7 is done. We still have quite a lot to do, but guess what? We're making good progress. We're understanding everything, and therefore we can continue to move on forward. So if you haven't already, you can watch this for yourself. We're watching it as well live, and I'm studying it live in front of you guys, so nothing is that I'm doing is hidden. And of course, you guys can follow along as well as we both learn. But we're moving on to episode 7. The homework wasn't set for this episode, but we'll probably just review it tomorrow because we did write a lot. And so there's definitely a lot we can go over. You know, from here all the way down, it's quite a bit. It's probably the most packed episode, despite it being one of the ones that we easily understood. Cool. So yeah, we'll go over that tomorrow. For those again who either joined the stream late or maybe they skip through the video, I don't know. This is the website. I see it just live. This is my personal journal. You can sign into your own account. We have a ability to log your trades here, your calendar, analytics, the AI agent for the premium features, cloud storage. You can contact me, also vote for the community, etc. etc. I might actually separate this, so let me make that known. This is the document we use to do updates. So today is we're going to do some work on the website and some planning for. Well, I'm actually going to get ready first. We're going to have a quick shower, and then after that shower, get ready. Leave an hour, 20 minutes. So I should be able to shower, get ready quite quickly, and then going to plan some of the content we want to record for the daily live stream, daily posts on Instagram and TikTok. Then also find an ability to, find some time to kind of either draft up what we're going to change or make some changes generally. Yeah, we can move on. But yeah, thank you guys. It's been your boy CJ. See tomorrow we'll go back at it again. We go into episode 7, and I will see you guys tomorrow, day 44, day 43 complete. Peace.